this video is probably going to be the final video of this channel because I'm going to tell you the secret formula to picking great stocks. How I picked Presco PLC, Okomo Oil, all the stocks I mentioned at the beginning of the year, all the stocks I mentioned in the video in April, all the stocks that are performing well. I want to show you the method. A lot of you have asked, maybe like 4 people, maybe not 4, maybe 3, have asked, how do you know this is the stock? So I'm just going to show you my process. It's quick and easy. So here's my Excel sheet. It is measuring 9 metrics, and out of 9, you want to get 9/9. I mean, 8/9 is not bad. 7/9 is not bad. But anything less, maybe you have to think about that stock, twice. In this instance, the example I'm using, which is Presco PLC, they got 9/9. Now, I understand you might be looking at this spreadsheet and be wondering, this is confusing. What are you supposed to do with this? Let me explain each column. So, column 1, that's the name. Company, that's Presco PLC. Company is the stock. Stock is a company, is a business. Yeah, we get that. So, column 2, that's column B. We look at, it's very simple. This is how much this company has grown every year for 5 years. So, averagely, every year, this company is growing by 72%. You get that? So, if you have 10,000 naira every year, that 10,000 naira is turning to 17,000 naira. That's what it's telling you. This company is growing that 10,000 naira to 17,000 naira every year. For every 10,000 naira they have, they turn it to 17,000 naira every year. We get that. Let's move on. So, for column C, if the company says it made 100 naira in profit, how much cash is actually in the bank? It's very simple. You have those people around you that will tell you that, oh, that salary is 2 million naira, 5 million naira, and you say, okay, let me see your bank balance, and you see 20,000 naira there. Yeah, that's not great. If you're making Malta, you're making so much money, we should at least see something close to what you're making in that account. Now, this is very simple. It answers itself. If the company says it made 100 naira in profit, how much cash is actually in the bank? They can fake that profit. A company can say they sell 100 million naira. The issue with that is that out of that 100 million naira, maybe only 50%, only 50 million naira has entered the account. That is not great for an investor. You want a company that if they're making 100 million naira, they actually getting the cash. Are they not the same thing? No. A company would show you revenue and profit. That is not actual cash. And that is why we have 3 statements. We have 3 report cards. One report card is the income statement, which shows how much they made and how much they spent. Then we have the balance sheet that shows how much the company owns, like what they own and what they owe. So, do they own 4-bedroom flats in Lekki, Banana Island, another owing Zenith Bank or GT Bank and the rest? So that's what the balance sheet shows you. While the cash flow statement shows you what is actually in the bank, like that company, how much they have in the bank account. Did money enter? Where did the money come from? How much is left at the end of the year? So let's go back to our Excel sheet. I will go back to that later. So here we're saying if the company is claiming that they made 100 in profit, how much is actually in the bank? In this case, for Presco PLC, they said they have 100 in profit, right? They made 100 in profit. They actually have 136 in the bank. That is good. When it's below 100 naira, then, you start asking questions. Are they not collecting the cash? When they make the money, when they send product to people, are the people not paying? Are they having so much debtors that are not paying them? And so on and so forth. Let's move on. No time. The next one, column D, is how many years the company had extra cash after paying its bills. Extra cash in business is called free cash flow. So this is only, we're just trying to check that, are they having free cash flow? Are they always having extra cash? So extra cash is when they make money, they pay their bills, whatever is left after paying their bills, that's extra cash. That money can be used for so many other nice things. So how many years did they have free cash flow? All the numbers we're doing, this my analysis is for 5 years. So that's 2024. We are not done with 2025. So there's 2024, 2023, 2022, 2021, and 2020. The last 5 years. So in the last 5 years, how many of those years did this business, Presco PLC, how many did they have extra cash after paying all their bills? So the result here is 5. So they got 5 over 5. 5 years out of the last 5 years, they got extra cash, which is very good. So they passed. So Presco have passed 1, 2, 3, 3 over 9. We still have 6 to go. So the next one is, if they were to pay their debt, company has debt. You say, why is the company having debt? The company needs debt. It's not because they'll make business like you. Your salary is enough, so you would act as, it's almost like that actually. It's almost like that, only business like you. So a company needs debt to fund growth. So they borrow money from the bank, or they will issue bonds to people and say, come give us your money, we'll pay you back with interest. We need that money now. We can make that money in 3 to 5 years or 10 years, but we need it now to grow now. So we can't just wait and be making our money gradually. Don't worry, we'll pay back the money with interest. So that's debt. Companies have debt. It's not like a company, when you hear that company, Presco PLC, there's debt there. Businesses use debt to grow. So it's not always a bad thing, or it's not a bad thing when you see it there. So this question is basically asking, if we take this company's earnings, right? If they say they made 100 million this year, okay, how many years will it take them to clear all that debt if you use that money? Did you get that? Let me read it exactly how I wrote it. How many years it will take the company to clear all its debt using the money they say they made? So this is 0.18. Remember, my question is how many years? So 0.1, it's not 1 year. So meaning that if you take Presco PLC's earnings, it can clear all that debt in months, not up to a year, which is fantastic. It's very good. You might put a stock you like there and you'll see 5, 7, 10 years, or 5, 7, 10. That's so basically 5 years, 7 years, or 10 years. It's not great if you have a company that it takes 10 years of the earnings to clear all that debt. It's not great. Now, some businesses use debt to do leverage. So banks and debt and leverage, the 5 and 6. Don't carry bank and put in my templates. Just pack them outside. This is for other businesses, agriculture, oil and gas. The other businesses, remove banks from here, because banks can use debt. They know how to use debt very, very well. So let's go back. For Presco PLC, it take them just a few months to clear all that debt if they use that total earnings. Now you may wonder, why they not doing it? Oga, calm down now. Now people be shareholders. I'm a shareholder, they pay us dividend every year. Now, if that to use the entire money to go and pay debt, that means to reduce our dividend now. And I want dividend this year, I want next year. So they should be paying back the debt as they agreed with the bank, small. I'll be with the bondholders. Pay the debt small, pay us our dividend. And also, let's say they're not even paying dividend. They've already used debt to grow the business. Instead of taking more debt, why not use more? The one that is due, pay the debt that is due. Then the remaining money you use to grow the business and other things. So because they can doesn't mean they should. This company is fantastic. They can pay all that debt in less than a year. Good news. It becomes, so anything 2 years and below is not bad. If they can use 2 years of that earning to clear their debt, that's not bad. So if this number is 2 or lower than 2, it's good. But when you start going 3, 4, 5, 6, it's not great. That means you're not earning enough to clear your debt. And it can be a deal breaker in certain stocks. Let's move on. We've wasted so much time on that point. So Presco did all. So they've gotten 4 over 4. So the next one is how easily the company can pay loan interest from its earnings. You will not be like, Peter. Okay, we know sabi this calculation with the talk, but you cannot confuse us. What did you just finish saying now? What are you saying again? So the last one, I said clearing all that debt. Now, this one is how easily the company can pay loan interest from its earnings. Interest is different from the debt. So when you borrow money now, there's principal. That's if you borrow 10 naira, your principal is 10 naira. But the person will now say that, okay, you borrow 10 naira because I'm giving you my money. You will pay back 15 naira. That 5 naira on top of the 10 naira is the interest. So this one is focusing on that. This one is saying how easily the company can pay loan interest from its earnings, from what they're making. How many times can they clear that earnings for that period? So in this instance, we have 10.56. That's the result for Presco. This simply just means that Presco can pay loan interest 10.5 times, which is good, which is fantastic. In short, anything above 5 is good. Let's move on. The next is how much profit is left from every 100 naira after paying bills. How much profit is left from every 100 naira they have after paying bill. So if this company have 100 naira and they pay all their bills, NEPA, salaries, and the likes, what is left? So the answer here is 60 naira 73 ko. So when they make a profit of 100 naira and they pay all their bills, this company will still have 60 naira 73 ko. Or you call it operating margin. But we are not here for big English. You get it now. For every 100 naira, they pay all their bills, they'll still have 60 naira 73 ko, right? Which is good for this kind of business. So let's move on. So that's 6/6 for Presco. You see? They're doing well. At this point, if I was looking at a stock and they've gotten 6/9, I'm beginning to put on my seatbelt. I'm about to just dog walk by the share. Like 6/9 is already good, but I need another one pass mark. I like getting from 7/9 and above. I like it. So the next one. How much cash is left for every 100 naira of reported profit after paying for new projects? So this sounds like one of the things we've just spoken about, but don't worry. I'm not trying to confuse you. Let me just explain it very well. How much cash is left for every 100 naira of reported profit after paying for new projects? What am I talking about? New projects, or in people will call it CapEx, capital expenditures. So maybe they're buying buildings, they're buying new equipment, paying for big items that the business needs to grow. So for example, for a bakery will buy flour, they'll buy sugar. But that is not capital expenditure. That's not the new projects we're talking about here. Those things are the things they use every day. The kind of purchase we're talking about here is when a bakery buys an oven. Why would you buy an oven? Maybe to make bread. Maybe before you're making bread in 6 hours. But this oven you just bought now will make you make bread in 3 hours. So you're going to make more bread in 24 hours. Get it? Or you're buying a bigger oven. The previous oven was making 10 bread. Now you have an oven that is going to make you 50 bread. So production will improve. So this is for buying things that make you grow. So capital expenditure. I don't say all this big English and confuse you and make you just say, you see, this is why I don't buy shares, or this is why I don't like about shares. You'll be saying big grammar, capital expenditure. What is that? It's basically simple. How much cash is left for every 100 naira of reported profit after paying for new projects? So all those big purchases. Remember, we are saying that if the company earlier, the number we looked at earlier was that if the company said they make 100 naira, how much is in the bank, right? Now we're saying that by the time we pay for those big projects, how much is now left, right? It's great if it's going to be 100 naira or above. It's going to be fantastically great. But unfortunately, in this instance, for Presco PLC, it's 84 naira 69 ko. It's not bad for me. Anyways, if it's 100 naira that is still left or above 100 naira, it's awesome. It's a dream. But between 70 naira and 99 naira is okay in my own books. I feel it's okay. I give it a pass for that. Anything less than 70 naira left, I tend to feel the stock on that instance. Like, okay, you might be getting to the angle of borrowing money to fund your projects. But in this instance, it's a pass for me. So Presco have gotten 7/9. They passed this. 84 naira 69 kobo is left after they pay for their projects. They still have 84 naira 69 kobo. There's enough money now to do other things. So you're wasting time. Let's quickly move to the next one. The next one is how many times the company can pay for new buildings and equipment. How many times, with the money they have, how many times can they pay for it? So the result we have here is 2.64. This means that Presco PLC can pay for their new buildings and equipment 2 times, almost 3 times. 2 times, which is good. If the company, anything above 1.5 is good. 2.6 is great. Higher than that, you're fantastic. We can manage that. If it's less than 1, boss, you don't feel them. You don't feel them. Just move on. So now, Presco have gotten 8/9. The last one is very simple. How much the number of company shares has increased over time. What this one is looking for is that, are they diluting their shares? So for example, the answer here for Presco is 0. 0 is fantastic. 0 is a good mark. They are not diluting your shares. So if you have Presco shares, the business is not diluting the shares. I will explain that. Diluting the shares means, okay, for example, Presco, they have 1 billion shares, right? If Presco need more money tomorrow and they don't want to borrow it from bank and they want to get it from the stock market, what they just do is they'll come out and say, look, we previously had 1 billion shares. Now we want to have 2 billion shares. So we're creating an extra 1 billion shares from thin air. Now, what that does is it's going to dilute the shares we have. So, for instance, a typical tuber of yam, you can get 10 slices from a typical tuber of yam. Now, 10 people are taken from that yam. Now, the owner of the yam can say that economy is hard though. For this economy, well, they chop 10 slices of yam for one tuber, you be thief. So let's make it 20 slices from one tuber. So there are more mouths to feed. And the slices are now small. You're getting a smaller size of the pie. So, but in an instance where the answer is 0, they are not affecting. You're still getting your full 10 slices. Fantastic. If the numbers start going up, in short, if it goes 5% or above, it just means that they're beginning to mess with the size of the yam you're getting from the tuber, which is not good. Just dilution, another way to call it. So, in this my metric, Presco got 9/9, which is fantastic. Now, how did I get these numbers? These numbers, can you find them? It's very simple. Everything I have here on this Excel sheet is calculated. I inserted a formula there. And for you to get something like this for any share, any stock you want, any business you want to invest in, you can get these numbers for them. From today, from now. It's don't go anywhere now. I have to show you how you put it. So there are 3 tabs on this template I'm going to share with you. There's one called description, there's one called data, and there's results. We're looking at the result tab. So the description tab is just basically explaining what different things mean. But, the grammar is too big there. So don't worry, if you don't understand that, you can still survive. The data tab is where the magic happens. So on the data tab, I colored some cells. Some cells are colored yellow. So any cell with yellow means that you can edit it. You can write there. Don't touch any other cells. Just the cells in yellow. That's where you put your own numbers inside. So as you can see there, I have details from 2020 to 2024, 5 years. Now at the bottom you see 3 details. That's the free cash flow, the EBITDA, total debt. That one is self-calculated. I didn't want to stress you. That one you most likely not find it on the report card of these companies. So that's why I put it there in such a way that it calculates itself. All you just need to do is fill in details for the other cells. Now you'll be like, Oga, you said this one was simple. You're stressing us now. Don't worry, it won't take 10 minutes. This is not going to take 10 minutes. On your income statement, you will just go. Any company you're investing in, you download the report card for the year. It's called Audited Financial Statements. You can just download one and see where it is. Income statement is very simple. We just need 4 numbers there. We need the revenue. You know what revenue is now, what they sold. We need the interest expense. That's the money they pay to the bank or that debtors. You see it is written there, revenue. You see interest expense is written there. You just copy the number. Put in our template. That's all. You will see tax expense. It's also there. That's the money they pay to FRS. They're paying their taxes. You see it there. You put it there. Net income, you see it at the bottom of your income statement. It's there. Sometimes it's called net income. It's also called profits after tax or net profit. You see it there. Let's move on. On your balance sheet. So 4 numbers on income statement. On that same audited financials or report card for a company, you see balance sheet. Balance sheet, you just need 3 numbers. Simple numbers. Cash and cash equivalents. You see it there. You just go there, copy the number, drop it there. Bam, that's all. Non-current borrowings, you see it on the balance sheet. You put it there. Current borrowings, you see it on the balance sheet. Simple, 3 numbers, we are done. See, I'm not stressing you. And finally, the cash flow statement is also on that report card I just told you about. We just need 3 numbers. And cash flow from operations, you really don't need to know what it means, but it basically means this is the money they make from their main business. So you say, what other money will they receive? It's not money from their main business. Now you might own a farm business. Now you might own a yam business. Farm business. You might own a yam business. So in your yam business now, when you sell yam, that money that enters, that's cash flow from operation, from the sale of yam. But you might, in your yam business, go and you can meet a bank and say, bank, please, I'm not generating enough cash to buy more farmland, to grow more yam tubers. So can you give me a loan? So That one is also on this cash flow statement. It is cash flow from finance. It's called cash flow from finance. So you are borrowing money and the money is coming into the business. So we should not confuse that money you're borrowing with cash flow from operations. That's why we're picking cash flow from operations. There's another one, cash flow from investing activities. So waiting with that. Okay, you have a yam farm. Doesn't mean that you don't have Bitcoin or you don't have stocks. So if you are making profit from that and it's entering the business, you don't want to confuse it from the main money that the business is doing from buying and selling of yam. You get it? So that's why we're just picking cash flow from operations. On that same cash flow statement, we'll see depreciation and amortization. Big grammar. Don't worry, this is one of the simplest things on this list. You don't need to know the meaning, but let me just tell you. And today you're going to know something. So depreciation and amortization. Let's say you buy a car for your business, your yam business. We go buy pickup. Let's say we buy pickup for your yam business. The pickup is 10 million naira. Instead of just registering 10 million naira, bam, on your books, you can put it gradually. So this year you put 2 million naira. Next year you put 2 million naira for the truck. So your pickup truck, 2 million naira the first year you bought it, 2 million naira the second year. So it will take you 5 years to fully recognize the cost of that truck. So that full cost is not just coming to your books and messing your numbers up once. You can represent it. That's depreciation. Amortization is the same thing, but it's not for tangible things like trucks and other physical things that we can touch. It's for things like patents, what do they call them? Softwares, licenses, all these kind of things. So next is capital expenditures or CapEx. You don't need to know, you just pick it from your cash flow statement and drop it there. But basically, it's those big because I told you that when you're buying things that your business needs for growth. So things like a new warehouse, new trucks, new building, new oven for your bakery, things like that. Yeah, that's capital expenditure. Then shares outstanding. That one you can just Google it. You just any stock you're interested in. Which stock? FTN, Cocoa, or Zenith Bank, or Fidelity Bank, or Presco PLC, or come on, just go to Google and say the company's name, shares outstanding. Google will give you that number. It's easily you can easily access it there. You can also check ngxgroup.com. That is the Nigerian Stock Exchange website. It's ngxgroup.com. Find the company there. So you go to listed companies, you select the company you want, you see the shares outstanding. For Presco PLC, it's 1 billion shares, as I said earlier. And it has remained 1 billion shares for the last 5 years. They're not diluting, which is great. That is all you need to get. When you put all these numbers, where I just mentioned like this, our results sheet will be populated and you see your results. Is your company getting 9/9, 8/9, or 7/9? This is what I use to filter out stocks. Now, a lot of stocks on the Nigerian Stock Exchange are doing fantastic. The numbers are ridiculously well. They are growing. Our stocks are growing. People are investing. Don't just go and buy any stock. Because some stocks are actually great and good. So they're growing. The growth makes sense. Because when the market shakes, when you shake body small and it just drops, because the market normally bounce. So now it's going up and it gets to a height, gravity, it will bounce. And when it's bouncing, it's coming down small. When it's bouncing, the only companies that follow it to bounce up are very good companies. This thing I put here helps you filter out good companies. That's the idea of this template. This is my secret formula I've given to you. I don't need to make any other video on this channel again. That's everything. So this is it. If you will subscribe, or if you like the video, if you like, share it with somebody you like or you love, that you want to also you also want them to improve their finances. If you like, share it to them. Anything you like, do. It's not my business. Maybe I should start a new YouTube channel. This one don't turn. I'll start a brand new YouTube channel. What will you do there? I don't think. What am I going to do yourself? Wait, I want to do. I'll do a channel about. Is there a male hairstyle channel? Because I know that female hairstyle channel. But I don't know how to barb now. And I'll learn how to barb, then do a channel about that. Then no, I'll do a channel about football. No, I'm terrible with that. I like watching. I don't like talking about it. Manchester United only kill me with hypertension. But guys, this is it. This is the secret formula. I've answered most of the questions. This is how I select those stocks. This helps me weed out the cheap stocks that don't have strong financials. Is after I look at these, when the stock passes this criteria, pass at least 7 out of this, I will now start looking at the management, the news I'm hearing, oh, are they getting new management? Or did they have a fantastic management? Who is the CEO? Who's the chairman? You know, things, are they expanding? Are they buying new companies? I'll look at those ones after the fact. And that is where we stop the video today. This is so long and I never intended for it to be this long. All right, guys. Bye-bye. See you when I see you. Cheers.